DoorDash is one step closer to becoming a publicly traded company. The food delivery service unveiled paperwork today for its initial public offering, and our tech editor, Dan Howley, got a look at that paperwork. So, Dan, any surprises that you found in that filing?
Yeah, I think the big surprise was how well DoorDash has done as a result of the pandemic. I mean, we knew that a lot more people were obviously ordering in. A lot of restaurants still not fully opened, or maybe they don't have the capacity. So the best way for them to survive was to allow for takeout kind of things along those lines. And so for the last quarter, DoorDash reported 1.9. I'm sorry, the last 9 months. 9 months. DoorDash reported 1.9 billion in revenue. That was a huge jump for them. During that same period last year, they had 587 million. So that just goes to show you how much that company has managed to thrive as a result of the pandemic and the situation surrounding it. And I think one of the other interesting things is just how many Dashers, these are the people that drive DoorDash deliveries, there are. So the company actually has 1 million different Dashers around the country, and they work with several 100,000 restaurants currently. And basically, what we're kind of getting out of this or from this is the idea that the company, is on an upward trajectory, though they still aren't necessarily without losses. They had a net loss in that same 9-month period where they brought in that 1.9 billion of 149 million. So obviously, they're still not at the point where they're making a full profit, but the turnaround seems to have come much quicker than was previously predicted as a result of the pandemic. And just real quickly, their last valuation had them pegged at $16 billion. So when they do eventually go public, they should get a good amount of cash from that. They previously raised 2.5 billion. And again, this is something that's going to continue to do well, as are all of the other kind of pandemic related stocks, as we start to see the country go into kind of another lockdown phase.
And I guess you can file this under manage investor expectations, because in that filing, DoorDash also warned that the pace of revenue growth might start to slow here. It expects orders to also fall in the future. Are you reading anything much into that other than they're just trying to manage expectations?
Yeah, I think it's more about managing expectations. And look, they're the largest delivery service in the country. They're bigger than Grubhub, bigger than Uber Eats. Uber Eats, by the way, has done incredibly well for Uber in particular, especially around the time of the pandemic. They've seen triple-digit growth, and basically, they're almost relying on that solely as a revenue stream at this point. So I do think, though, that DoorDash does have, obviously that big advantage of having the larger market share. And, it's something where even if you're in territory where Grubhub or its affiliates Seamless are, kind of the big names in the area, like New York, you still do get DoorDash used a lot. So I don't think necessarily that the smaller kind of competition out there is going to become a bigger problem for them. But I do think it is, look, they do have a large scale. They have 1 million drivers. I mean, so the ability for them to expand beyond that, I think, is somewhat limited. But I think as we see more people go back into delivery mode, they should still see a nice boost.